Yeah. Good morning, everyone. Good afternoon. Good evening, depending on your location or around the globe. This is Madabuchobin Emmanuel speaking, your finance coach. Okay. Yeah. Today we'll be looking at the Nigerian tax reform bill, which is a major move by this current administration. We'll be looking at the impact of the bill as it affects businesses. Now, my focus is usually on small businesses. So, the Nigerian tax reform bill has now been passed by the National Assembly. Okay, now it's just waiting for presidential assent and to be gazetted into law. And the bill is a major change, a major change. The question is, how will it affect small businesses? So in this video, I will be telling you the good parts of the bill and the bad part of the bill. So you prepare your business just to avoid the bad parts of the bill. So generally, the tax reform is meant to generate additional revenue for the government. So in that simply means that when government is making more money, that means that people are paying more of taxes. Okay, so you have to prepare your business so you won't be the one that will pay the extra tax and the extra amount of tax. Yeah, but pay the right amount of tax. So our aim at OMC is to ensure that businesses pay the correct amount of tax and ensure that everybody complies to support the economy. So the overview of the tax reform objective, what does the government want to achieve? The government wants to achieve increased tax compliance. People are not paying tax, businesses are not paying tax a lot. So the government want everybody to enter the tax net, both individual and businesses. So that's one of the aim of this reform. Okay, so that everybody will be compliant. Broaden the tax base, seek to include more individual and business in the tax system. So the tax, the first one, which is tax compliance, emphasize on those that are in the tax bracket. Are they really paying their tax? The second one is we need more people to pay their tax, especially in Nigeria that we have a lot of informal sector. We have different markets, eco markets, uh, different part of the country in the north, in the east, that people just transact in cash. The governments don't know what's happening there, and they are trying to bring people into the tax net as well. That's the aim of this. One of the aim of this bill. The next one is to simplify the tax processes. That's to simplify the tax. But that is so that if you read the bill, you should understand it. A layman should easily access the tax bills and you should understand it. And basically, these bills are actually four in all. The first bill is the what the Senate and the House of Assembly just passed. They are the National Assembly passed. There are four bills, four tax bills. The first one is the Nigerian Revenue Service Establishment Bill, now passed by the National Assembly. Nigerian Revenue Service Establishment Bill. We also have the Joint Revenue Board, the Joint Revenue Board Establishment Bill, and that's the second one. That second bill covers both the a board that kind of covers the former Joint Tax Board covers both for federal, state, and local government. Managing the entire tax landscape in Nigeria. The first one is Nigerian Revenue Service. That means that it covers not only tax, it covers more revenue earning power of the country. Okay, in addition to apart from taxes, then we have the third one, which is the Nigerian Tax Administration Bill. That's how to administer tax in Nigeria, and the main one, which is the Nigerian Tax Bill 2025. So those are the four bills that have been passed by the National Assembly. You need to be aware of that. Okay, now I'll be moving into the key section or the key features of this particular bill. So we need to know what are the key features of the tax reform bill that have been passed by the National Assembly, and how does this affect you and I, especially small businesses that are upcoming. Okay, I encourage you to watch the remaining part of this video to enlighten yourself. As they say, knowledge is power, knowledge is also wealth, so that you can be able to avoid some tax penalty. Because a lot of people may not know that this bill have been passed by the National Assembly, and they might, and this bill might be effective anytime soon when it's signed by Mr. President. So that means that we will be in a new tax regime. So you don't need to use the former tax law. Then you need to use this new tax law because of the current tax regime in which we are in. Okay, what are the key features of this bill? Quickly, we'll be looking at the key features of this bill. Now, the first one, one of the key features of this bill basically is VAT is the good news. I said the key features will be divided into uh, different different parts. The key features of this bill will be divided into different parts. Okay. Now, there's the good news and there is a bad news. Now, the good news is what I'll be sharing with you first. I'll be sharing the good news with you. Then I'll be now be sharing the second part of the features that you need to get ready for. The second part. Okay, which I said are not too good. Now, the good news is that the VAT is maintained at 7.5%. Now, before now, the initial bill was planned to increase VAT systematically to up to 15%. Okay, but with this one that was passed, they still maintain VAT at 7.5%, which is good news. Now, another aspect of the good news is that uh, VAT inputs can be claimed on all items, including fixed assets and services. So, VAT has two parts. We have the input VAT and the output VAT. When you buy your goods, it's called and you pay VAT. Okay, it's called an input VAT. And when you are selling to your customer and you're charging them VAT, that's an output VAT. Because VAT is value added, you are supposed to pay the difference to the government. Okay, so but now, before now, the VAT are usually charged on only tangible stock in trade, goods that you can see, you can touch, you can feel, like raw material, like what you can really see. So okay, salt, and maybe basic. Let's look at other items. Probably you are into buying and selling of gadgets like phones, laptop. You buy, you sell. When you sell those laptops, like these are your trading items. You charge VAT. When you buy them, you also pay VAT. Or even though you're importing them, you pay VAT when you are clearing the goods. Okay, so these are input and output. But now, VAT is allowed on services. So if you are rendering services, you can claim input VAT on on services that you bought or fixed asset that you bought. Now, this might be a difficult tax. Okay, so it might be a difficult tax because the input VAT on services are like people you hire, employee you hired to work for you, and they render services. But of course, it's a good news, it's a good part, meaning that you can claim more incentive, more of your input VAT from your trading. However, not really 100% good news per se, because when you claim your input VAT, it means that you cannot charge it to the P&L and your income taxes might increase. But if looking at time value of money, because income taxes are paid uh, at the end of the year. So that means you are claiming your input VAT early before the end of the year or the next year. Okay. So in a way, it's good. Okay. So the good news is VAT remains 7.5%. Another good news is that you can claim your input VAT on fixed assets and on services. Now, let's now look at the area which is not too good news. Not too good news. That's the bad news now. Now, there's a 4% MAC tax introduced as development levy. So, apart from a normal tax, you pay 30% basic, the standard one, you pay additional 4%. Okay, and which will cover tertiary education fund, Nigeria Education Loan Fund, NITDA, Information Technology Development Levy, NASTINI, that's Science and Engineering, National Cyber Security Fund, Defense Security Fund. So you're paying additional 4%. Some of these MAC tax are paid by bigger company before, very big company, but in a way, this 4% has kind of put some people into the tax net. Okay, it has put some people into the tax net to pay them as well. So, but for me, I feel taxes should be one. If you are paying 30%, let it be 30%. If you are paying 31, 32%, let it be 30%. Now, all these MAC taxes, I don't know the essence of these MAC taxes anyway, because I feel that the taxes when you are paid, the government could share to each of these agencies and each of these government agency, directly instead of charging Nigerians and Nigerian businesses additional specialized tax like education tax, cyber security tax, defense tax. These are basic function of government. But it's a law. We have to follow the law. But just know that there's additional 4%. Now, another one is offences and penalty are now stiffer and in a single document. Now, businesses in Nigeria, from what we've seen in practice, pays more tax. I mean, pay less tax, but they pay more penalties and interest and penalty, than the normal taxes, right, for small business. Okay, this is what, but I'll do the statistics, but from what we've seen in practice as consultants. So even now, if you do not keep accounting record, proper record, there's a penalty for it. So businesses must take, and the penalty are more stiffer. I'll have a special training for businesses to let you know the penalties now. And you can't afford to be penalized. You can't afford to be penalized. So I encourage small businesses, medium businesses to try to live within the confines of the law. Try to live within the confines of the law to avoid these penalties. So just stay tuned, watch our YouTube, with time. We are going to I'll share this penalty with us. Okay. Now this is just to let you know that this we are entering into a new tax regime, and this new tax regime is more interesting. There's a good part, there's a bad part. I want us to enjoy the good part and avoid the bad part. Thank you for listening. Bye for now.